What's up, everyone? It's Kadi with Money Investing, and the markets here rebounding a little bit back higher with the Nasdaq crossing back over 12,000. We have the S&P 500 closing back about 4,100, and the Dow Jones crossing over 33,400 points on the day. All three indices were green. However, they are mostly down on the week. S&P and Nasdaq are down on the week. The Dow Jones is closing higher on the week. It is a shorter week, so today was the last trading day of the week because tomorrow is a holiday in observation of a Good Friday. So hope you guys are doing great and are having a great time. If you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us and getting access to all the buy and sell alerts, options alerts, trade ideas. I will be releasing the swing trading idea videos very soon for all the members privately, so that's also available for you. And there is a 60% annual discount for the fundamental and technical analysis courses, the bundle, and you get lifetime access to all the educational lectures, over 80 plus lectures and 16 to 20 plus hours of content. So a link's going to be down below. The coupon code is going to be Easter in observance of Easter this upcoming long weekend. So S&P 500 ends Thursday higher but suffers its first down week in 4. And we did get the ADP numbers yesterday, which I went over in my previous video, but 145,000 was the job gains for the month of March versus consensus of 200,000. And that's also a significant reduction from the previous month, which was revised up to 261,000. We also did get the Fed's balance sheet. I'm going to circle back to this, but jobless claims was also quite interesting because the actual number came in at 228,000 and the consensus was 201,000. So we came in much higher than what the consensus was. And not only that, the prior number was also revised higher. We were pretty much when we went from 198,000 to over 246,000. That's a big revision to the upside. So I mentioned this in our Discord before the trading day started. Somebody asked me about how the jobless claims number is going to affect the market. Simply mentioned that a higher than expected number equals more indicators that the job market is weakening, equals economic recession probabilities are higher, equals the Federal Reserve is going to ease back on their federal interest rate hike policy path, equals markets could see that as being a bit more bullish and more optimistic and more upbeat because this is a clear sign the economy is starting to weaken out a little bit because of labor market is not as strong as what it was a few months ago. This right here is the Fed's balance sheet. As you can see that we are once again on the right path to balance sheet reduction, and $73 billion week over week was trimmed off of the Fed's balance sheet. Once again, that's great. That's combination of mortgage-backed securities and treasury securities as well for the Federal Reserve, and the total assets are now coming down to $8.6 trillion for the Federal Reserve. So we are moving in the right direction for the Fed's balance sheet after a few weeks of printing $400 billion in support of the banking failures. Now, this right here is the calendar, upcoming calendar. So tomorrow is a holiday, but we do still have the employment situation coming out at 8:30 a.m. Eastern. So that's going to be first thing first. I will most likely do like a private live stream if possible, but I will definitely be sharing my thoughts on the employment situation and what that number looks like. Unemployment rate, in my opinion, is going to potentially start to move up a little bit as the year progresses. And we also do have consumer credit coming out at 3 p.m. Eastern tomorrow. This right here is how the markets performed. So once again, we're seeing Microsoft, Google, Meta push higher, do really well. Energy starting to pull back a little bit. Financials were also slightly lower. Defensives were flat. Consumer cyclicals were flat. Utilities were slightly higher. So it was quite a mixed day with the Nasdaq performing much better because of big tech once again taking charge and pushing higher quite substantially. So Microsoft, Google, Meta, 3 companies really charging here and taking the Nasdaq higher with them. And this right here is what you'll notice is kind of like the breath behind the market. So Dow Jones was very flat, rightly so, because it was a 15-15 split, advancing versus declining stocks. S&P 500 was slightly higher. There were more stocks pushing higher than they were declining, but the more concerning part is the Nasdaq 100. As you can see that it was a 0.74%, so that's a pretty decent gain, but there were fewer stocks that were pushing higher. More stocks, more than half, were actually going down, and yet the Nasdaq was up 0.74%. So what does that tell you? That simply tells you that once again, we're kind of concentrated between a handful of names that are really, really charging higher, that are pushing up in order to take the Nasdaq and the S&P higher with them. In the case of S&P, yes, we are seeing a bit of a broader base rally. I mean, utilities and real estate and healthcare and defensives and consumer cyclicals and basic materials and financials, they were all there to support the market and push it higher. But it was a lot of it came from technology, more specifically Google, Meta, Microsoft, to be precise. So this right here is which sectors did well. So comm services, again, Google and Meta doing really well in the last 1 week and in the last 1 month. Google, Meta, communication services have been the best performing sector for the market, followed by utilities, real estate, healthcare, technology, financials, all these sectors. And again, in the last 1 week, we have a pretty significant split. And over the last 1 month, we also have a pretty good split between all these sectors. So comm services, healthcare, utilities, technologies, all of them doing higher, going higher and doing well. And real estate, industrial, financials selling off a little bit. Sugar prices higher, palladium, cotton, live cattle, coffee, canola, oats, all pushing up, with corn, heating oil, orange juice, and natural gas selling off. Ethereum back under 1900, Bitcoin's a little bit over $28,000 right now. So volatility is back down, selling off a little bit over 3.6%. So getting rejected at 19, almost 20 levels and selling right back down. Crude oil prices are once again kind of hanging in there. They're just, hanging at that resistance at $80, $81 per barrel after this huge cap up. We've seen 3 to 4 days of consistent sideways action. And this right here is going to be that resistance for crude oil for us to watch. And for Brent, it's going to stay put a little bit under $85 per barrel, but 91 is going to be that level. In fact, this is going to be a more important resistance at close to $87, $86 per barrel for Brent. Next up, we're going to talk a little bit about the yields. 10-year yield continues to slide lower. It was down to as low as 3.3%, although we have been lower than that. We have been as low as 3.28, 3.2.5. This is also a really important indicator because we have already pushed up quite a bit. I mean, from lows of negative 108 basis points, this indicator has pretty much gone up 70-80%, which is the spread between the 10 and the 2-year. Very, very good recession indicator. And right now we're just moving sideways. We're not able to fully turn positive just yet. The highest in more recent terms we've gotten up to is negative 27 basis points. We're very close to actually turning positive, meaning the 10-year once again yielding more than the 2-year yield. Now, coming over to individual stocks, first we're going to start off with the S&P 500, of course, and you can see that we are seeing a little bit of a bounce back up and getting another retest into this resistance, into this critical area of resistance for the market. And you'll notice that previously when we were at these levels, we did see a lot of back and forth, and it's very normal for the bulls and the bears to kind of fight it out, and for us to see a lot of back and forth, a lot of indecision. It's kind of like a tug of war happening at that resistance, and eventually whoever wins out is the winning direction. In other words, this right here, the bears pretty much won, and we saw the markets kind of sliding lower, dropping a little bit over 8%. And right now we're once again seeing the bears did kind of take over the last couple of days, but the bulls came in strong today to kind of bring us back up. So this is going to be a critical area for us to watch between 41 and 4,200, and for us to see how we trade in that range, because I do believe there's going to be a lot of volatility to move forward. A lot of back and forth there. Same thing with the Nasdaq. You can see that we were kind of selling off. We saw a big green candle here on February 7th. So today it was April 6th, April 7th, around that time. We saw the markets kind of rally 1.9%, and then the following day it dropped over 1.6%, and then dropped another 1% the day after. Saw another few rallies here, and then sold right back down for the Nasdaq. So it is very common for us to go back and forth. It'd be nice if you get a breakout and the Nasdaq can continue its move up. 13,000 is going to be that next resistance. 4,300 is going to be that next level for the S&P. But again, we have to be conscious about and aware about that resistance and the critical level that we are testing at the moment, which is going to be 12,280 for the Nasdaq. Talking about Apple here, and Apple also pushing up. It is, again, a little bit on the overbought side, as I've already pointed out. We are still trading inside this very, very small downtrending channel, lower highs and lower lows. So we are testing that lower high at the moment. Support level is going to stay put at 157, 158, and resistance all the way up to 177 for Apple moving forward. That's going to be a more near-term resistance to watch. Talking about Amazon, and Amazon here also up a little bit close to 1%. So for the most part, we have just been consolidating sideways. So you can see that we have been in between that range within which Amazon's been trading at, and resistance is going to stay put roughly around 105 to as high as 106. That's going to be in line with this lower high for Amazon. And of course, we're still in the context of this overall downtrend, meaning lower highs and lower lows. Talking about, what is it? Google, or no, Google comes in way later. Tesla here, green candle on a red day does suggest there were some buyers present. We came down to 179 and the buyers once again stepped in to push us back up. Support level is going to stay put inside this green rectangle. That's going to be a level sitting roughly at 166 to 175 for Tesla, and resistance is going to stay put at $214 to $215 per share. Of course, that's been the range within which Tesla's been trading at, and something that we have also discussed and talked about in our previous videos. Talking about NVIDIA, and NVIDIA here on the day also pushing higher. So green candle on a green day pushing up 0.5% back over $270, and our target and resistance is going to stay put roughly around $292. So this right here is something that we have talked about previously. NVIDIA, the momentum's super strong. There is a lot of bullishness around this company with respect to AI. So I'd be very careful if you are thinking about shorting this. If you are, going to the downside on this, expecting more downside, just be careful, because every time NVIDIA comes down just a little bit, it gets bought up, buyers step in, and they get way too excited about this dip. So resistance is going to stay put roughly at 291, 292. Again, not to mention RSI MACD are still overbought, but it is pushing higher on lower and lower volume at the moment. So I'm definitely going to be cautious with NVIDIA. Talking about Advanced Micro Devices, and AMD here getting a green candle on a red day. So yesterday was definitely a big sell-off, down 3.45%. Today we're just seeing a bit of a move back up, pretty much flat on a day-over-day basis, but resistance is going to stay put at roughly about $102, $103. This is a resistance, and support level is going to stay put roughly at around $76, $77 per share for Advanced Micro Devices. So both of the covered calls for AMD are now almost closed. One of them is fully closed. The other ones, I'm up a little bit over 80 to 85%. We'll be looking to close that one out on Monday. Next up, we've got PayPal. And PayPal here getting a momentum back up over 1.8, almost 2%. So is seeing some buyers stepping in. But for the most part, we haven't really gone anywhere except for just consolidating sideways in this range where PayPal has just been trading sideways. Resistance is going to stay put at $77, $78, so that is going to be that level to watch, with the support level staying put roughly at around $67 to $70 per share. $70 also is going to be my personal fair value on the company. So right now, still the context of this descending triangle, and that lower high is going to be the one to watch, sitting roughly at 77, all the way up to as much as $87 per share, kind of in line with this previous resistance. Talking about Square, and Square here, lots of consolidation sideways, and support level is going to stay put at $58, $59. So this is going to be that level to watch, of course, and resistance all the way up to $83, $89. We've just been coming down inside this downtrending channel for Square. After the short attack, we saw this gap down pretty heavily, then push right back up, and right now we're just drifting lower once again. So resistance is going to stay put at $83, $89, with support sitting roughly at $59 to as low as $51 per share. Talking about Meta, and Meta here on the day pushing higher, $216, and continues to charge up another 2%, and resistance is going to stay up at $222 per share. So this right here is going to be that level to watch for Meta right now in the more near term, and support level is going to stay put at 198. The higher it gets, the better, and the most likely scenario is that I will be selling some calls on Meta very soon. We've got a huge gap to fill, somewhere between $260 and $288 per share for Meta platforms. Talking about Netflix, and Netflix here down about 88 basis points, so just curling back lower a little bit. So it did get up to as much as 350s, now starting to come right back down, but resistance is going to stay up roughly at 365, 366 for Netflix. So that right there is going to be that resistance, and support level in line with this higher low to as low as 276 for Netflix as well. Those right there are going to be some levels to watch for the company. Google here gets a huge lift, and $108, $109. Looks like we are starting to finally break to the upside for Google after a very long time of downtrending channel, lower highs and lower lows, getting rejected. Seems like Google is finally starting to break to the upside pretty well, and we are seeing some momentum, and the next resistance and target is going to be all the way up to 119 to as much as $120 per share. 123 to be precise is going to be that level to watch for Google beyond 108, 109. So again, you'll notice that we did see a breakout, retest, and now we're starting to see some more momentum to the upside once again. Microsoft getting up to that resistance. So this right here was the analysis. Even though the RSI, the MACD is overbought here, it continues to charge up and push higher. 292 is going to be that level to watch. And on the day, we pretty much got up to as much as $292. So that is going to be that resistance to watch for Microsoft. And yeah, I mean, fair value is a little bit lower for me. It's closer to 230, 220s. But of course, Microsoft on this AI boom continues to move higher and gets a lot of momentum to the upside. So that is going to be that resistance level to watch. And beyond that, we'll be paying attention to a level right over here, sitting roughly at $312 per share for Microsoft. And last but not least, we got Shopify. And Shopify on the day was pretty flat, just up over 35 basis points. And we are seeing a little bit of momentum once again intraday. And this is the higher low, which we are now starting to break down of. But support level is going to stay put down to $42 per share. And we got a gap to fill for Shopify all the way up to $49 to $52 per share. So I hope you guys enjoyed this video and a complete update on the markets. We do have the unemployment numbers coming out tomorrow at 8:30 a.m. Eastern. I will be sharing them with all the members and, of course, doing a video with my analysis and opinion on that as well. So this week is over. We are still down for the NASDAQ and the S&P. The Dow is still higher a little bit, although we did see back and forth here rotation. The S&P and the NASDAQ are very much at a critical resistance where it is going to get really interesting what happens going into next few weeks as inflation numbers, the Fed meetings in May, but we do have earnings coming out also at the end of April. So it's going to be quite interesting to see who ends up winning out this battle. I have a little bit of a hinge that the bears are still going to make it very difficult for us to break out above this resistance, as we have been rejected at these levels 3 to 4 different times in the past. So let me know your comments down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. There are limited spots left available if you want to join, and the Fundamental and Tech Analysis courses currently 60% off, and that's the bundle that you can get lifetime access to, and coupon code is going to be Easter in celebration of Easter as well. So as always, happy investing. I'll see you all in the next video.